Right now, the IRS has issued warnings that millions of Americans could lose their tax refunds or have them frozen because of new rules most people don't even know exist. And if you think this doesn't apply to you, you might want to stay right here for the next few minutes, because what you don't know about these 2026 tax changes could cost you hundreds or even thousands of dollars. Welcome to Frank Join Financial, the channel that takes complicated money topics and breaks them down into plain, simple English that anyone can understand. Whether you just started thinking about your taxes or you've been filing for years, this is the place for honest, no-nonsense financial education with zero fluff. Today, we are talking about something that is urgent and extremely important right now in May 2026. We're breaking down the IRS warnings, the brand new tax rules, what could freeze your refund, what could increase your refund, and exactly what steps you need to take today to protect your money. So grab a pen and stay until the end, because there's a really important action step at the very end of this video that most people skip, and it could save you a lot of money. Let's start with the big picture, because I want you to fully understand the environment we are in right now. The IRS is not the same agency it was 2 years ago. Here's something that should get your attention. The IRS ended 2025 with about 74,000 employees. That is a 27% drop from roughly 102,000 employees at the start of 2025. That is more than 1 in 4 workers gone. At the same time, the agency is dealing with some of the most complex tax law changes it has ever had to implement, all at once. The National Taxpayer Advocate, Aaron Collins, the independent watchdog for taxpayers inside the IRS, warned Congress directly that this combination of staff cuts and complex new laws could seriously strain the agency's ability to help people who run into problems. She said, and I want you to hear this clearly, that the success of this filing season will depend on how well the IRS can assist the millions of taxpayers who experience problems. Millions. That's not a small number. That's people just like you and me. So what does this mean for you in practical terms? It means if you make a mistake on your return, if your refund gets flagged, or if you need to reach someone at the IRS for help, you may be waiting a very long time. Phone lines are stretched, processing is slower, and the new tax laws add even more room for errors than ever before. This is not the time to guess. This is not the time to rush. This is the time to be informed and intentional. And that's exactly what we are going to do together right now. The first major IRS warning you need to know about is one that has already caught nearly 1 million taxpayers off guard this season. The IRS is officially phasing out paper refund checks. Gone. Done. This is part of a presidential executive order to modernize payments to and from U.S. bank accounts. And here is where people are getting hurt. Under the new 2026 rules, if you file your tax return without providing valid bank account information for direct deposit, your refund will be frozen. Not delayed for a day or two. Frozen. The IRS will send you a notice called a CP53E. You then have 30 days to go online, log into your IRS account, and provide your bank routing and account numbers. If you don't respond within that window, the IRS may eventually send a paper check. But that process can take an additional 6 weeks or more. Now think about how stressful that is. Imagine you're counting on your refund to pay a bill, cover rent, or handle an emergency. And instead of money in your account, you get a letter in the mail telling you your refund is on hold. Heads of thousands of Americans this season. Congressional Democrats on the House Ways and Means Committee wrote a formal letter to Treasury Secretary Scott Bessent in March 2026, warning that these notices were leaving affected filers with almost no fast options to get their money. So what should you do right now? If you haven't filed yet, always include your bank routing number and account number on your return. If you already filed without that information, go to irs.gov and set up your free IRS online account today. You can log in at any time, check your refund status, and add or update your banking information before any freeze happens. This one step could save you weeks of waiting. Now let's talk about the good news, because there is genuinely a lot of good news in these 2026 tax changes that most people are not taking full advantage of. Here's a number that should excite you. The average tax refund in 2026 is running about 10% higher than it was at the same point last year. The average refund amount has climbed to just over $3,700. And experts at the Tax Foundation say the new tax laws could boost refunds by anywhere from $300 to $1,000 for many filers. So why is that? It comes down to 4 major new benefits that became available on your 2025 tax return filed in 2026. The first is the no tax on tips deduction. If you work in a job where you receive tips, think restaurant servers, bartenders, hairstylists, hotel workers, rideshare drivers, the tips you earned in 2025 are now deductible, not taxed. You keep that money. This is a real meaningful change for millions of working Americans who rely on gratuities as a core part of their income. Let me put a real face on this. Think about someone like James, a bartender in Chicago who made $18,000 in tips last year. Under the old rules, that $18,000 was taxed just like regular wages. Under the new rules, that entire amount could be deductible from his taxable income. Depending on his tax bracket, that could mean $2,000 to $3,500 more in his pocket. That is not pocket change. That is life-changing money for a working-class American. The second big new benefit is the no tax on overtime deduction. If you worked overtime in 2025, that extra pay, the halftime portion of time and a half, is now deductible up to $2,500 for single filers and $25,000 for married couples filing jointly. This applies to wages earned from 2025 through 2028. The phase-out for single filers begins at $150,000 in modified adjusted gross income and $300,000 for joint filers. So for the vast majority of working Americans, this is a benefit you can use. Think about a nurse, a factory worker, a delivery driver, anyone who put in extra hours last year. That overtime deduction could seriously reduce what you owe or significantly boost your refund. The third change is an expanded child tax credit. For your 2025 tax return, the child tax credit has increased to $2,200 per qualifying child under the age of 17. That is up from the previous amount. This may boost refunds for millions of families. But here is the key thing to understand. Income limits still apply. If your adjusted gross income is above certain thresholds, the credit starts to phase out. So you need to check your specific situation. Don't assume. Use the IRS Interactive Tax Assistant tool at irs.gov to verify your eligibility before you file. It's free, it's accurate, and it takes about 10 minutes. The fourth new benefit is the senior deduction, and this one is brand new. If you are 65 years of age or older, you may now qualify for an additional deduction of up to $6,000 if you're a single filer, or $12,000 if you are married filing jointly. This is on top of the existing additional standard deduction that seniors already get. However, and this is important, the benefit phases out if your modified adjusted gross income is above $75,000 for single filers or $150,000 for married couples. So if you're a senior and you're watching this, please check your eligibility. This could be one of the most valuable new deductions you've ever had access to. All right, I want to make sure you're still with me because we're about to get into some of the most important and most overlooked IRS warnings of this entire season. This is the part of the video that could literally put money back in your hands or keep you from losing it. So don't go anywhere. What I'm about to share next is exactly what the IRS, the National Taxpayer Advocate, and financial experts are urging every American to pay close attention to right now. Let's talk about unclaimed refunds and non-filers, because the IRS issued a major warning specifically about this. Right now, the IRS is warning that approximately 20 million Americans who have not filed a return may be sitting on money they are completely entitled to. These are people who think they don't need to file because their income is low or because they don't owe any taxes. But here's the thing that most people miss. You do not have to owe taxes to get a refund. Refundable credits, like the Earned Income Tax Credit and the Additional Child Tax Credit, can actually put money in your pocket even if you didn't owe a single dollar in federal income tax. But if you don't file a return, you don't get a cent. The government doesn't send it to you automatically. You have to claim it. The Earned Income Tax Credit is one of the most powerful anti-poverty tools in the American tax system. For the 2025 tax year, the credit ranges from $649 for workers with no children all the way up to $8,046 for families with 3 or more qualifying children. An estimated 1 in 5 eligible taxpayers never claims it. Not because they don't qualify, but because they don't know they do. That is billions of dollars left on the table every single year. And here is the urgency. There's a 3-year time limit to claim a refund. If you miss it, the money doesn't sit there waiting for you forever. It goes back to the government, and you cannot get it back. So if you haven't filed returns for 2022, 2023, or 2024, the clock is running right now. Now, let's talk about something that trips up even experienced filers, and that is the PATH Act delay. If you claim the Earned Income Tax Credit or the Additional Child Tax Credit on your 2025 return, federal law requires the IRS to hold your entire refund. Not just the credit portion, but your entire refund, until at least mid-February. This is part of the Protecting Americans from Tax Hikes Act, which was put in place to prevent fraudulent refund claims. It is not a penalty, it's a verification step. For the 2026 filing season, the IRS began releasing these held refunds in batches starting around February 18th. Had their money by about March 2nd. But here is what you need to understand for right now, in May 2026. If you still haven't filed and you plan to claim either of these credits, file as soon as possible. The sooner you file, the sooner the IRS can process your return. Use IRS Free File if your income qualifies. It's completely free and it's available at irs.gov. Let me also address something that is causing real confusion this year: the interaction between the new tip and overtime deductions and the earned income tax credit. Here is an important nuance you absolutely must know. Even though your tip and overtime income may now be deductible for income tax purposes under the OBEA, the IRS has clarified that you must still include the full amount of tip and overtime income when calculating your earned income for EITC eligibility. In other words, those deductions reduce your taxable income, but they do not reduce your earned income for the purpose of determining whether you qualify for the credit or how large your credit will be. This is a technical rule that a lot of people are getting wrong. Getting it wrong means either leaving EITC money on the table or claiming more than you're entitled to, which can trigger an IRS audit letter and delay your refund significantly. If this applies to you, please use a reputable tax software program or consult a tax professional to make sure this is handled correctly on your return. Here's another thing the IRS is warning about this season that is easy to overlook: digital assets. That means cryptocurrency, stablecoins, and NFTs. If you bought, sold, traded, or received any digital assets in 2025, you must report those transactions on your tax return. The IRS requires you to answer the digital asset question on Form 1040, period. No exceptions, no gray areas. Some taxpayers may have already received a Form 1099-DA from their crypto broker. Whether you received that form or not, you are still required to report. Failing to report digital asset income is one of the fastest ways to get a letter from the IRS and potentially face penalties and interest on top of whatever you owe. This is not an area where you want to guess or skip. Report everything accurately. Now, let's zoom out and talk about something that is specifically relevant for people who are filing in May 2026, which is where we are right now. The original federal filing deadline for 2025 returns was April 15th, 2026. If you requested an extension, your new deadline is October 15th, 2026. But here's something critical that a lot of people misunderstand about extensions. An extension gives you more time to file your paperwork. It does not give you more time to pay any taxes you owe. If you owed money and didn't pay it by April 15th, you are already accruing late payment penalties and interest. Every single day you wait is costing you money. If you owe and you haven't paid yet, the smartest move you can make today is to set up an IRS payment plan, also called an installment agreement, directly on irs.gov. You can do this yourself in about 15 minutes, and it stops the escalating penalty situation in its tracks. So let's pull everything together, because I know we have covered a tremendous amount of ground today. Here is your clear, actionable summary. The IRS is phasing out paper checks. So set up your IRS online account at irs.gov and make sure your direct deposit information is on your return. The average refund is up 10% this season thanks to the new no tax on tips, no tax on overtime, expanded child tax credit, and new senior deduction. Make sure you're claiming every benefit you are entitled to. The IRS has warned that 20 million non-filers may be leaving free refund money unclaimed. If you haven't filed, do it now before the 3-year clock runs out on older returns. The PATH Act delay applies to EITC and additional child tax credit filers. This is normal, expected, and not a red flag. Tip and overtime income must still be counted as earned income for EITC purposes, even if it's deductible elsewhere. Get this right. Digital asset transactions must be reported on every return, no exceptions. And if you got an extension and you owe taxes, pay now to stop penalties from growing. Here's the message I want to leave you with today. The tax code is complicated, the IRS is understaffed, and the new laws are genuinely complex, but none of that has to overwhelm you. Not if you stay informed. You just spent the last 15 minutes getting more useful, accurate, up-to-date tax knowledge than most Americans will get all year. And that matters, because informed people make better decisions. They claim the credits they deserve, they avoid the mistakes that trigger audits, and they keep more of their own money they worked hard for. So here's your homework. Right now, after this video ends, go to irs.gov and log into or create your free IRS online account. Verify your refund status, confirm your direct deposit information is on file, and if you haven't filed yet, start today. Don't wait. If this video helped you, please take 2 seconds and hit the like button right now. It helps more people find this channel and get the information they need. And if you're not subscribed yet, hit subscribe and the notification bell so you never miss a video. We post every single week, honest, plain English financial education for real people who want to make smarter money decisions. Drop a comment below and tell me, which of these IRS changes surprised you the most? Was it the refund freeze for missing direct deposit, the no tax on tips rule, or something else? Your comment helps me understand what you need, and it helps shape the next video. This is Frank, Join Financial. Thank you so much for watching, and I will see you in the next one.